Hello friends, welcome to FIN-TRAINICA channel, a channel devoted to finance and investing education. In this playlist of finance and investing tidbits, of course there are many other playlists which I request you to explore. We are going to deal with this topic of insider trading. Insider trading is different from insider trades, about which I have already created video in the context of investing. But here we are going to talk about insider trading and why is it considered a criminal offense. Welcome to this video. While price of a share is widely known to every participant, we all know it, it's available during the market hours and also as a record after that, the decision to buy or sell a share depends on assessment of value. And as I've already talked about this idea of value in other videos, value is a very subjective concept. It varies from person to person. But value is also a product of information. Thus, better the information, better the understanding and estimation of value. Companies therefore are required to release information to the investor community in a very structured way to ensure that everyone has a fair access to that information. Yet, there is a lot of information which is not in the public domain. Such information should not be unfairly used by people who know it to the disadvantage of who do not know. Out of the information not known in the public domain, some is price sensitive and some is not. For example, if a projects company wins a major project which is path-breaking or far larger than all its previous projects, or it breaks open into a new market and gets a major order there, this is an information which is price sensitive. The market is going to react to this kind of information, of course, positively. And this can be called as price sensitive information. On the other hand, let us say, for example, the company has been getting, apart from those large contracts, many small contracts. And that small contract data is not even published. And a new such small contract is won by this company and one executive gets to know about it ahead of others. It's important information, no doubt. It's also non-public information, not in the public domain, but it's not going to be very price sensitive, right? It's not going to really shift the price trajectory of the company's share. So information about new business wins, which are very significant, major strategic decisions to exit a business or buy another business, profit margin, new product introductions, is all very price sensitive, and that can have a major impact on investors' view about the value. This kind of information should not be shared or acted upon by the insiders who are in know of it, since it would amount to robbing another investor who does not know about it. Indirectly, this is also robbery itself, and hence any such trading, buying or selling by insiders acting on non-public information is a criminal act. Particularly in the Indian context, investors earlier used to seek such tips from insiders to take their own share purchase decisions. Being party to such information and taking action on it is also a criminal act for the same reason. Therefore, we need to be very careful not to indulge in such acts, as well as not to share non-public information that may be available with us as an executive with others. Quite often earlier, a lot of information used to get discussed over lunch tables. Casually, people from one function meet people from another function and they talk about some information over lunch table. Now, that is also not something which is right thing to do, because you never know how that information may be misused. So it's not just question of sharing outside the organization, it is also being careful about which information you could talk to casually and which information you should never do that even within the organization. I have conducted workshops for over 75 companies, and unless I have completed at least 18 months after the last workshop, I don't invest in the shares of that company. In fact, because of this restriction that I have imposed on myself, I had to develop a method of investing which would never create this conflict. And therefore, as I have talked about in my Essentials of Financial Fitness or financial video series, financial wellness video series, I have talked about how I have developed a different method, which is investing through holding and investment companies, because those companies are never going to invite me for any workshop. Also, I have two small caps. Again, they are micro caps really. So those companies are also unlikely to invite me for any such workshop, and therefore I don't have any conflict in my own mind. And we have to ensure that we invest in shares in a very ethical way so that that wealth creation lasts and does not dissipate away. Thank you very much.